Hello, everyone. How's it going? Today is Tuesday evening. Odds are I'm going to get this video out Wednesday morning because it does get out pretty late. Before I begin, I want to mention two things. First of all, this is being recorded. I know we have Gov as a visitor and maybe more will join later. But it is being recorded and it will end up on Facebook. So if you have an issue with that, let me know. Feel free to send me a message and I can edit your part out. Secondly, while Dennis is a professional, I am not. And this video is not intended for investment advice. This is basically just an informational purposes only, just a little chat session. Therefore, take everything that we say with a grain of salt, run it by your financial advisor. And if you don't have a financial advisor, hit up Dennis. He'd be more than happy to guide you in your financial endeavors. So with that said, two things that I want to talk about. First of all, someone came to me yesterday and said, hey, I got short Wells Fargo. What do you think? So what I did is I looked at this daily chart. It looks like she did well because hopefully she's still in it. I looked at this daily chart yesterday and noticed the 4 coming down into the 8. And although these are stacked normally, for instance, the 4 is above the 8, which is above the 34. There was yesterday no real sign to go short yet, conservatively. But if you want us, and then here's the parabolic SARs, which are below as well. So the only thing I could kind of grasp at was that the 4 was coming down, and sure enough, today the 4 and the 8 are converging, and overnight, yesterday, today, the MACD is also crossing. The only warning is that Thursday before the bell, they report earnings. So we'll see how that goes. As it turns out, it was a great short. We continue to sell off today. And I think looking at the SPY as well, I think, the SPY opened up bullishly and then sold off, which is what we saw yesterday. Actually we chopped around and then eventually sold off. I actually was busy most of the day, but like at 2:30ish, I came in. Let's see, where's my drawings? Let's get rid of these guys. Drawing tools, a box. I noticed this. I don't know why my drawing tool doesn't work. It should be a box. Okay, I came in at 2:30ish and noticed, see why, I don't know why my box doesn't work. I noticed this chopping around right here. I know in talking with Alan in the past, he's mentioned Darvis boxes. And you kind of just watch this box either for a break or above or a break below. I happen to be watching the puts on it, and not that I traded it, but saw that they did well. The interesting thing is I thought this candle sold off at the end of the day. I'm looking on my mobile app. I thought I saw a huge red candle, but that might have been after hours. Again, if you want to look at the daily, we're still bullish on the parabolic SARs. We're still, even though the 34 is way up here, the 4 is crossing or is coming down. So it'll be interesting to see, and the MACD is actually converging as well. So it'll be interesting to see where we go in the next couple of days. If I had to guess or put a gun to my head, I'd be more bullish than bearish, or I'd be more bearish than bullish. I don't know. I see us coming down into the support. But with that said, I am going to turn it over to Dennis. Let me see if I can get this. And I think Dennis will talk about investments. He'll talk about what they do at PVG Asset and different scenarios to allow you to make money without risking losses. So there you go, Dennis. It's your turn.
Okay. Well, thanks. I start off with my charts here. Can you see these, Brian?
Yep.
Beautiful. First thing I want to talk about is the dollar. I always see, the key to investing here is the dollar. What is the dollar doing? And so if you look at it right here, it's, last couple of days, 2 days or so, it's been, slowly drifting down. And as you can see on Ready, Aim, Fire, we reached the top on the 30-minute chart. MACD is crossed over. So with the dollar starting to lean towards going bearish, that's not a bad time to consider going into a little bit of bonds and buying a little bit of gold, very, very short term, believe it or not. And I'll show you what I mean that they all tie together. So let's go to my alpha charts here, alpha group. And look at TLT. Notice TLT is up 1.5% today. So I jumped on that, even though these things are red. I was kind of thinking, your MACD is bullish on that. So I went and bought a little bit of government bonds as a defense strategy. And gold. I bought GDX. And you can see this is green right now. If you look on a 30 or 60-minute chart, it's been moving up. Anticipation of the dollar is getting weaker. Okay.
Yeah, it's interesting you mentioned going into gold and bonds because there's talk about the upcoming earnings being soft due to supply issues. Which could basically pull money out of the stock market and into those, quote, safe havens, if you want to call them that. So it might be an interesting play.
Well, as you notice, the dollar is sitting right around 94.5 right now. I'm only thinking the dollar may go down to maybe 93.5, a dollar, not much. But that's what I'm kind of thinking. So I'm kind of playing as a defense strategy right now. I still think the dollar goes higher, maybe to 96. So that's my thought on that. Let's take a look at some of our other indices here with the SPY. SPY. There she is. Thought I had it. Alpha.
I bet if you clicked on symbol up there, it would put them alphabetically, but that would ruin your order.
I rank them according to strength for the day, how it's done percentage-wise.
Oh, well, the move, yeah.
So let's take a look at your 30 and 60-minute charts here in the SPY. And here, as Brian was mentioned, we use a 34-day moving average on an intraday chart. The 4 is in white. The 8-day is in the blue. And then you've got your 34 here. Looking at a 30-minute chart and the way it landed today, I see no reason to be in this. You know, there's signs all over the place. You don't want to be here.
Right. You know, and I forget the terms, but the moving averages are inverted, meaning normally your 4 will be above your 8, which will be above your 34. But in this case, it's the exact opposite. Your 34 is, or basically your 4 is below your 8, which is below your 34. So,
Yep.
which kind of tends to lead that it's going down, because your 4 is going to move the fastest, and if it's below everything, it's dragging things down. So
I'm just looking for one sign usually that, hey, at least the 4 crossed above the 8, or your MACD is crossed, and I see nothing here. You get a better, clearer picture looking at a 60-minute chart, same thing.
yeah.
And then your daily chart, you can see, you know, yeah, it was moving up a little bit here. But what we're looking for is for the 4 or the 8-day moving average crossing above the 13, which is the red one here. And then you got here your 34 is the green one here. Okay.
Yeah.
And it's,
I was going to say, I think what gives me the most pause is, you know, even though the bulls come out in the morning, and we've seen it Monday, we've seen it today, the bulls are trying to move this market up, but the bears are just so strong that they take control of any, any strength in the market. Basically, they're looking for sell-offs.
yep. So here's your Dow Jones Industrial Average. Now that one looks a little bit better on a 60-minute chart. Not a bad play. Look at the daily chart on the Dow Jones Industrial Average. So not bad. Now here you can see where the 4 has crossed the 8, and the 8-day moving average, yeah, that's below the 13. Okay. So a little bit more bullish on the Dow here. If I had to pick one. And let's go over to the Qs. There's your Qs right here. The Qs are the weakest of all of them, and that's I went short the Qs this afternoon, believe it or not. That one I took advantage and went short with.
Oh, yeah.
Okay.
Yeah, you can see that start to roll over.
Yep. I just went right this afternoon and says, I'm done with this. And here's your daily chart on the Qs. As you can see, it is the weakest one. There's nothing here to make it a quality event.
And did you short the Qs with SQQQ?
No, I bought TECS, which is a triple on technology.
Okay. Triple short technology.
Yep. Your Russell is all over the board, believe it or not. That one's a crazy one. So, and it did close below our moving averages on the 30-minute chart. Okay. And here's your daily chart on the Russell IWM. And you can see here, you got your parabolic SARS out. And then you can see here, you're just sitting on the line here with your 13-day moving average, your 200-day moving average. It's all sitting right there together. So, all right. Wanted to go to my charts here real quick. And I'm gonna have to close the door here. Hold on a second. Okay. I'm back. These are my current positions here. You can see I bought UBT, which is short government bonds 2 times. And I says, this looks pretty good. Okay. Yeah, I had a nice update on that. And then I bought TECS, which is TECS. And I bought it at $4.58 this afternoon. And see, I'm up 2.5% on that. I bought AG, which is First Majestic Silver, and up 2.25 there. I bought AUY, is one of my favorite ones to try. I ended up buying about 1,700 shares of it. Okay, and you can see it's all green.
Yeah.
And I own Boyle, which is your natural gas. That one's a tough one. I took a beating on it yesterday. I decided to double down today. And then I bought Nail. Okay. And I own TNA, which is the Russell 3 times right there.
So it looks like you're going back into triple ETFs, which,
Yep.
and we've explained before, you know, when the underlying moves 1, these move 3.
Mm-hmm. But yeah, I've got enough defense to back up all of these, and I'm not going to lose my shirt come tomorrow morning. And everything's green today.
Yeah.
The important thing is to keep green on your screen.
Right.
Yeah. So I'd like to jump over to another screen. I'm going to stop sharing here for a minute, Brian. I want to talk about tax-free investments, if that's okay.
Actually, before, and you probably need to swap over to your options traders, because someone actually asked a question in regards to, you know, the put call volumes, those sort of things.
Mm-hmm. Right.
And I wanted to show on Thinkorswim. Let's see here. Let me see. How do I share? I don't know if I can. Okay, share screen. So in our last video, and we'll just use the SPY for example, on the right of TradeStation were put volume, call volume, those sort of things. And if you go on Thinkorswim on the trade tab at the very bottom, there are 2 things. There's one is today's option statistics, which basically gives you your put call ratio. And then it gives you these sizzle indexes. And they're both below 1. So what these sizzle indexes are a look at the today's volume over the last 5 days. So for instance, if you have a value that's greater than 1, it means that today's call volume was greater than the average of the prior 5 days. So although it's not as visually representative as TradeStation was, it does give you some of the values, and it does give you where the calls and puts were bought. And it's based off a delta. You know, your in the money calls and puts are your delta 60s to 80s. So it looks like most of the volume was these lower deltas. The second thing to look at is today's time and sales. So in this, you can actually filter based on either calls or puts, what series. For instance, if you're only looking at the weeklies, and SPYs are a little different. And then it gives you the biggest trade. So That's something that, like I said, it's something similar that Thinkorswim has. It just looks a little different than TradeStation. But those option statistics are there for you. So let me throw it back to Dennis and let him talk about PVG strategies.
Do you still want to see my option charts, Brian, or no?
No, that's okay.
All right.
Yeah.
Give me a second. And I wanted to share. Can you see my charts, Brian?
Your screen, yeah.
Okay. This shows you the 4 different buckets to invest your money into. And it shows you the taxable investment. If you were to invest 100,000 at 7%, it was 107,000. 25% tax bracket is 5250 you would pay. And so your net return after 10 years consistently would be 5.25%. Then in 10 years, you'd have 166,000. And then if you take in, do that, you have to record all your gains and losses on your Schedule D, which could be a pain in the ass. Every time you buy and sell something, especially if you make 4 or 5 trades a day, that could be a real problem. You have to record all your short and long-term capital gains.
That's what accountants are for.
Or you can just get, staple your 1099 to your tax return and say, here you go, 50 pages.
Right.
Another better way to go is with a non-qualified annuity. It's after tax and tax deferred. Put $100,000 into it, 7% return equals 107,000, right? In 1 year. And then in 10 years, you're going to have 196,715 based on a 7% return. $100,000 is what you invested. 96,000 is your gain. Pay tax on the 96,000 only is 172,000. Now, what's neat about this strategy is I can go from a bond fund to a growth fund. I pay no taxes, just like your 401k. It's designed for the after-tax money. And you don't pay taxes until withdrawal and then only on the gain. But here's one of the little problems with that one. It's last in, first out. So you see here you have 172,000, right?
Yep.
And if you were to take 50,000 out, Brian, to buy your wife a brand new Mustang, that's all taxable.
Right.
Okay. So it's last in, first out, LIFO method of accounting. But it's good that you don't have to recognize the gains and, buying and selling every year. And you'll be further ahead over 5 years in the after-tax tax deferred method, if that's what you're looking to do. And they have over 350 investments that you can invest into, everything from going long the dollar, short the dollar, going long government bonds, short government bonds. It's all there. And they have, multiple fund families all in one package. There's no reason to go anywhere else.
Right.
So this is where I would put your after-tax money in this bucket here, number 2. The next bucket we're going to talk about is pre-tax and 100% taxable. and that would be a 401k. Put 100,000 in, I had to gross it up by 25 grand because it's pre-tax if you're with me. And then 7% return. So the first year you're off at $133,000 on your investment in 1 year. It may look like, 33% gain, but it's only 7%. And then you take your future value at 245,000, 25% tax equals 61,000. And so then net result is you're at 184,000 after 10 years. I like 401ks, don't get me wrong. It takes advantage of the employer match. And it's a good way to put some money away, tax deferred, and you get free money for doing it. So let's say you have an employer that agrees to match 3% on every 10,000 that you put into it. So you put in $10,000, your employer is going to put 3% of your pay in, which is another 3,000. So it really starts to compound.
Right.
Okay. But there's a couple caveats to it. You have a 10% IRS penalty if you take the money out before 59.5. Plus you have a federal tax of 25%, we're assuming. So that's 35%. And if you're lucky enough to live here in the state of Michigan, you get another 4.25. So you're up to about 40% of your money is going to be taken out in taxes. Okay. But the problem here is a what if. What if this number, the 25% tax bracket we calculated, what if that goes to 50%? Then the 61,000 changes to what, Brian?
Half of that.
Double.
Oh,
That would be basically $122,000 in taxes, making this investment worse than bucket number 2 and bucket number 1. So you're looking at 120,000 versus 184. So is there a better way to invest your money? Go after tax and tax-free. $100,000 investment, 7% returns, 107. Just like box number 2 over here, 107, 107, same thing. But here, you got 196,000 in your pocket with no taxes due. Isn't that neat?
yeah.
So what is some vehicles that grow tax-free? Roth IRA. If you qualify, if you're married, I believe you can both do a Roth IRA. If you have earned at least $14,000, you can put away $14,000 into a Roth IRA, both husband and wife. $7,000 in a Roth for your wife, $7,000 for yourself. And it all grows tax-free. The contributions can be taken out anytime out of a Roth IRA if you need it in case of emergency.
Because it's already taxed.
Right. The contributions can be taken out at any time. The growth has to only stay in there for 5 years, which is kind of cool. The next one that's tax-free, and a lot of people are not aware of, but 70% of the employers out there offer a Roth 401k. And if you're over 50, you can put away $26,000 away each year after tax and tax-free. So plus the employer matches 3% of your pay. So if you're making 50,000, that's another 3,000. So you're almost up to 30,000 that you can put away in a Roth 401k. And there's no income limits. Now, if you're under 50, the limit is 19.5. For those people that are younger, you can put 19.5 into a Roth 401k. And I would say go ahead and max it out.
Yeah.
If you're only doing the pre-tax, I'd only put into what the employer is matching. There's no point putting any more away. then put the rest into a Roth IRA. Number one, the Roth can be sort of an emergency fund if you need it. Because like I said, you can take your contributions out at any time. The third vehicle that you put money in that grows tax-free is life insurance. You can put up to, based on the death benefit, you can put $20,000, $30,000, $40,000 away underneath a life insurance policy, and it all grows tax-free. I won't say too much on the life insurance idea, but it's one of the pretty decent ideas. And here you can put a good chunk of money in. Brian wants to buy his wife a new Mustang. If he pulls it out of the life insurance, he doesn't have to pay it back right away. He can borrow the money out of a life insurance policy.
Right.
Okay. Whereas if you take money out of a Roth IRA to buy that Mustang, anything we heard of there, you'd have to have it put it back within 60 days. Okay. So the life insurance is a neat vehicle to have. So let's say you took 50 grand out of your life insurance policy, cash that you had in the policy. You could take and pull the 50 grand out, then pay back, let's say $500 a month for the next 6 or 7 years at zero cost interest loan, and the money's all back in there again. So plus they have a fixed account in there that's paying 3%, which is not bad. Municipal bonds are tax-free. Municipal bonds are pretty good, and a lot of them pay about 2 to 3% return tax-free. But how many people here trust the municipalities out there? They're laden with debt like no tomorrow, and a lot of obligations for pensions and all that type of stuff. 529s, you have young kids. That's another one that's tax-free.
Right.
Okay. What else is tax-free? Health savings accounts. You can put up to there like $7 grand a year if you're a family, and dump the money in there. It grows tax-free, comes out tax-free for medical expenses. Dependent care accounts. If you have kids in daycare, you can put money away for there. But that one's a dependent spending account. You use to use it or to use it, lose it thing.
Right.
Medical
Exactly.
spending accounts. There's lots of tax-free vehicles out there. And I always kind of tease people to get the hang of this stuff. I put a thing here, it's tax-free, it's first in, first out. So like the Roth IRAs, you can take your contributions out at any time. Okay. So if you had 2 dogs, Brian, you can name one LIFO and the one FIFO. So if you think of the annuities here, the non-qualified annuity, last in, which is your interest, comes out first. That's the LIFO method of accounting. And then the Roth IRAs, your tax vehicles, are most of the time first in, first out, FIFO method. Okay. So I just wanted to promote, putting money away tax-free. And I do think if you qualify for a Roth IRA, you should be doing it. It does act as a type of emergency fund too. They should have access to the money anytime if you needed it.
Right. Yeah, I like the idea of, only putting in what your employer matches to a 401k and then the rest to a Roth.
Yep, I think it's an excellent idea.
Okay, doke. Well, thank you. Thank you, Dennis.
You're welcome. All right. Well, I guess till next time.
Yeah.
And we'll
sure.
go from there.
Okay, sounds good. Everyone have a good night.
All right. Thanks, Brian.
Sure. Thank you, Dennis. Bye, Gov.
See you. Bye.